Assalamu alaikum friends, welcome to IAS 24 related parties, one of the important standard which always comes for the exam. Now, before I start, uh, there has been some changes to the standard, okay? Because as you know that from September 2021 there's a change in syllabus, but the change is not so wide, it's not so broad change. There are some little changes, and wherever the changes are there, I will always keep you notifying the changes. And for related parties, the change is that before it was asked as an ethical question. Most of the time, ethics is linked with related parties. So it's like whenever related party question is there, means it's you can write it as an ethical answer. But now what they have changed is now this can be asked as other reporting issues. It might not be linked with ethics. It might be or it might not be. Right? It's not always now with ethics. It can be asked as other reporting issues. So that is the only change in the related party, IS 24. That's it. Everything, the knowledge, the rest all remain same. Okay. So now IS 24, we have to, in this standard, we need to do two things. We have to identify who are the related party. From the case study, you have to be able to identify whether they are related party or not, and also what are the disclosure, what do you need to disclose in the related party. So definition of related party, need for the disclosure of related party, disclosure of related party. Okay, we start with the need for disclosure of related party. Related party is there, it needs to be disclosed. If you are not disclosing, it's said to be unethical, right? Because related party, if you are having a related party relationships with anyone and it is not disclosed, okay, because related party can have an effect, it can have an effect in your company. That's why it needs to be disclosed. So what is a related party? What is a related party transaction? It is the transfer of resources, services, or obligations between related parties regardless of whether a price is charged. It is between related parties. That is a related party transactions. But first we need to understand what is a related party. Who falls under related parties and who are not related parties. A list is given here. Okay. But transactions can happen between related parties. Transactions have been happening between related parties. Related party is something normal. Okay. It is a normal feature. It happens in the business. But if it's so, it needs to be disclosed. Okay. Because the users of the financial statement need to know that there's a related party relationship between these two, between your organization or you and the party who is related to the organization or you. Why? The only reason is because it can distort the financial performance and position of an entity. This is why. This is the main reason why related party needs to be disclosed, because it can distort the financial performance and position of the entity. Now, let us go through an example. So, company A owns 75% of B. Company A sells goods to company B at prices significantly above the market rate. Okay. As a result, profit of company A is higher if it have sold all of its goods to third party. Higher than if it had sold all of its goods to a third party. That means if A is selling to company B, the profit will be much higher than if company A would have sold the same goods to outside, to a third party, right? Because company A is charging higher prices than the market rate from B. So companies A's financial statements are not comparable with those of similar companies. So when you go and try to compare the company's A's financial statements with other, you cannot compare because their profit, company's A's profit is now very high because of that related party with B. You understanding? So it's not comparable. Okay, not comparable. It's not comparable. As you can see, the performance is distorted, right? because it is trading with an entity that it controls, because 75%. So 75% means A is having a control over B. Subsidiary, right? So they are controlling that entity. So because of that relationship, so they are now related because he is controlling. So they are known as related parties, A and B. Because of that related party companies, A's profit is very high, so you cannot compare it with other entities. You can see the performance is distorted of companies A. So company A and B are, what are they? Related parties. Users of the financial statements such as investors and banks need to be made aware of the transactions. You see, other stakeholders needs to be aware. That's why it needs to be disclosed, because even if both of you know that you are related, others should be made aware of it. Okay? So that they can make a proper assessment of the financial statements. Okay. Now, related party transactions are an area of audit risk that you may encounter in advanced audit and assurance. So, this standard definitely you have to go in depth if you are planning to take AAA. Now, definition of a related party. Okay, definitely there should be some relationship between the two. Okay, and some transactions. If a transaction happens between the two related parties, okay, then only you need to disclose. If there is no transactions happening, then the disclosure thing does not come. Okay, but definitely if you are in like for example the above one, they are a parent and a subsidiary, so it's impossible that a parent and a subsidiary will not have any transactions between them, right? They might have, right? It's very impossible, it's very rare that they will not have any transactions among themselves. So that means disclosure is there. With related party comes disclosure, but before going to disclosure part, let us first define who could be our related parties. Okay, so a related party is defined as a person or an entity. It could be a person, it could be an entity that is related to the entity that is preparing its financial statements. It has to be related to the entity that is preparing its financial statements. Okay, so there are some list which will help you that a related party relationship exists. What is it? A, B. Okay, so let us go through this list. It's a huge list, right? Number one. Okay, but let's start with A. A person or a close member of that person's family is related to a reporting entity. If that person, okay, so it could be a person or a close member of that person's family is related to a reporting entity. If that person has a control or joint control of the reporting entity. For example, if you have a control over another entity, then you, you are a related party to that company. You are a related party to your subsidiary. Control means a subsidiary. It could be joint control also. In that case also you are a related party. Significant influence, that means associate. Okay, that is also a related party. Is a member of a key management personnel of the reporting entity or of a parent of the or of a parent of the reporting entity. Key management personnel. Next, an entity is so this is they are talking about the person or a close member who is related to a reporting entity. Here they are talking about entity that is related to the reporting entity. If any of the following conditions apply, they are related party. How an entity can be related to a reporting entity? Here we were talking about the person and all the person and the. Here we are talking about the entity. Okay. So the entity and the reporting entity are the members of the same group. Three of you are in the same group. Okay, which means that each parent, subsidiary, and fellow subsidiary is related to the others. Okay. So the parent and the subsidiary, and also let's say that subsidiary has got another subsidiary. All the three are they are in a group because they are members of the same group. So they are related. One entity is an associate or joint venture of the other entity. For example, I'm your associate or I'm your joint venture. Or you are my associate, you are my joint venture. One of it, right? You are an associate of another or a joint venture, then you are related. Or an associate or joint venture of a member of a group, not only of the other entity. Even you could be an associate or joint venture of any member of a group of which the other entity is a member. Both entities are joint ventures of the same third party. The third party has to be same, of whom they both are the joint venture. Then they are related. Both the joint ventures, right? One entity is a joint venture of a third entity, and the other entity is an associate of the third entity. Okay, definitely it's a little bit hard to understand through the list, but when we go questions, you will definitely understand it better. Okay, the entity is a post-employment benefit plan for the benefit of employees of either reporting entity or an entity related to the reporting entity. So that employee benefit could either be for the reporting entity or entity which is related to that reporting entity. So if the reporting entity is itself such a plan, the sponsoring employees are also related to the reporting entity. Okay. The entity is controlled or jointly controlled by a person identified in A. A means the persons or the close family member. Okay. It is controlled or jointly controlled by a person. It could be any person identified in A. Okay. In A means it's this three, all this three. It could be any one of this who controls or jointly control the entity. A person identified in A, first part of A, has a significant influence over the entity or is a member of a key management person of the entity or a parent of the entity. Entity or any member of a group of which is a part provides key management personnel services to the reporting entity or to the parent of the reporting entity. Okay. So this list, you should go through this list. Okay. And the reason why you have to know the whole list is because any one of it will come. Okay. Maybe in the exam you will be given some scenario. One of it will apply for you to identify whether it could be an associate, it could be a joint venture, joint operation, it could be a associate, it could be a subsidiary, any one of it. It depends. Definitely, you will not be asked to write the whole list who are related parties. No, only one of it may apply. Okay, so you should know that which one is it from that list when you're writing the answer. But definitely, we'll do a question on related party. Group accounting is covered in a later chapter. You may therefore find the following definitions useful. Okay, so we know subsidiary is an entity who the investor has a control more than 50%. Joint venture, entity over which an investor has a joint control. Two or three people are having joint control, not just one investor. Associate, from 20 to 50% of ownership they have. They have a significant influence. They do not control the entity. Okay. When the word significant influence is mentioned, it is an associate. When it is joint control, it is joint venture. When it is a control, it is subsidiary. Okay. You have to link this. Okay. Maybe I will highlight it here. So the every time they are saying it has a control over this means they are a subsidiary. That's what it means. Because all these terms are covered in group accounting, which we haven't done yet. I mean, in the revision kit questions we have done, but not in the standard. I didn't cover the standard for group accounting. IFRS 3, IFRS 10 and all. So in the definition of related party, an associate includes subsidiaries of the associate. Okay. So it could be the subsidiaries of the associates. Associates could have subsidiaries, right? And a joint venture includes subsidiaries of the joint venture. So the joint venture also could have subsidiaries. So they are related. The joint venture and the subsidiary, they both are related. Associate and subsidiary, they both are related. Okay. So IS 24 knows that the following should not be considered. It's not only enough to know that who are related, you should also know who are not related parties. Okay. It is only three things are there. Two entity, because sometimes you might be asked and you might think it's a related party, but they might actually not be a related party. Maybe they might fall in this three list. So you should know both the list who are and who are not. Two entities just because they have a director or other member of key management person in common. Let's say company A and B. Okay, company A and B, they have a same director. Okay, or even the key management personnel, for example, finance director, they are sharing the same finance director. Right? That does not mean A and B are related. Okay. Number two joint ventures just because they share the joint control of a joint venture. The two joint ventures among themselves, they are not related parties. Just because they have a joint control over the joint venture, they are not. Let's say you and me, we are joint venturers. We have a joint control, right? In a joint venture. But you and me, we are not related party. A customer or a supplier with whom an entity transacts a significant volume of business, no matter how ever much transactions you do, the volume does not matter. Your supply and your customer, they are not related party to the entity, okay, to the organization. So these three are not related parties. Substance over form should be applied when deciding if two parties are related. Now let us summarize everything. Okay. So this is the reporting entity. Okay. Key management, associate, subsidiary, the parent, fellow subsidiary, and the key management. So they all are related to the reporting entity. The subsidiary is related to reporting entity. Associate is related to reporting entity. Fellow subsidiary is related to reporting entity. Parent is related to reporting entity. Key managements are related to reporting entity. Okay. Now they broke it down what they have discussed just above. We have actually finished. We are only left with disclosure, but before we go to disclosure, further details on definition. They broke down the definition further down. For example, they told close members of family. But who are those close members of family who are taken as related party? So they include this. Only from this list, if you see in your exam, take it as related party. Otherwise, they do not fall in the related party. Okay, that person's children and spouse or domestic person. For example, your children, right? If you have a children in an organization, you are doing transactions with them. They are your related party. Your children are your related party. Your spouse or your domestic partner, they are related party to you. Okay, children of that person. I'm giving a reference to you because if I say that person, you will be asking who is that person. Okay, so children of that person's spouse or domestic partner. So even your spouse's children, right? They might not be your children, but like say your stepchildren and all, even they are your close members of family. Dependents of that person or that person's spouse or domestic partner. So it could be dependents. Your dependent, like someone is dependent on you, or it could be someone is dependent on your spouse, okay, or domestic partner. Control. This is very important because everywhere, if you have seen in the related party, the word control, significant influence, joint control, these three things are always repeated. Control, significant influence, joint control. So you need to know the definition of the three. Okay, but in IFRS 10, definitely the full IFRS 10 is on this only. Okay, on control. But here we can briefly go over the three main things in order to say that they have a control or not. This IFRS 10, you need the help of IFRS 10 to define control. Because if an entity is not having a control over another entity, they are not related. To know whether they have a control or not, it is not always, they might not give you the percentage. Let's say they have acquired 80% or they are subsidiary, they might not say like this. They might give you some other information through which you should know whether they control or not. That's why IFRS 10, knowledge of IFRS 10 is required here. Not so much in depth, but just these three things, okay? Because these three things shows that a control exists, that an investor controls an investee. So control is defined in IFRS 10. Okay, when you see my IFRS 10, definitely the whole full thing is there on control. We'll be discussing that. So the investor has power over the investee. Investor should have the power over the investee. Sometimes they might write such words in the case study that he has a power over them, you know. So the word here is power. Investor should have a power over the investor. Next, investor is exposed or has rights to variable returns from his involvement with the investee. Okay, they are exposed. Who? The investor. They have rights to variable returns from his involvement with the investee. And investor has the ability to affect those returns through its power over the investee. Since they have a power, so he can affect the returns, he can change the returns, the investor. Okay, so these three conditions are there, control is there. Okay, normally, okay, in short, if these things are not there, one entity owns more than half of the entity equity shares of another entity. More than half means more than 50% they hold. It is known as they're having a control. Now let us go to the second, significant influence. What does this mean? This is defined in IAS 28. Okay, investment in associates and joint venture. This is the power to participate in. You can participate, but you cannot control. Not control the financial and the operating policy decisions of an entity. You cannot. So significant influence is normally assumed when an entity owns between 20 to 50%. Between this range, it is significant influence. Joint control. Joint control is defined in IFRS 11. Okay. So there's some agreement that they will share equally, or they will have a joint control. Okay. And when decisions about the relevant activities require this word, unanimous consent is very important. Of party sharing control, you need this. Whenever there is a unanimous consent needed, okay, about some relevant activities, decision for relevant activities, then it is joint control. Another word which was frequently repeated in related party definition is key management personnel. Who are key management personnel? The one who have the authority, not some lower level employee, okay? They are some top level people who has the authority and who have responsibility also for planning, directing, controlling the activities of the entity. They plan, they can direct, they can even control also, including any director. Mostly it is the director level people. They are known as key management personnel. It could be finance director, marketing director, sales director, right? Whether executive or otherwise of that entity. It could be executive, it could be non-executive, but they are key management personnel. So test your understanding will be, I'll be doing all your test your understanding in part 2 of this video, right? Let me finish the theory part. So all this thing is there for you to discuss whether related party relationship exists or not. Now let us go to the disclosure. What do you need to disclose? Parent and subsidiary relationships. So IAS 24, what do IAS 24 says? They say that relationships between parents and subsidiary should always be disclosed. You don't have any option. When it's a parent and subsidiary, you have to write that he's the subsidiary, you are the parent. Or if you are the subsidiary, you should say who is your parent. This needs to be disclosed always. And also, that's not enough that you have a relationship. He's a subsidiary or parent. The name of the parent, and if different, the ultimate controlling party should be given. You should write the name of the parent also. If different, the ultimate controlling party should be given. Okay? Whoever is the controlling party, this also should be given. They are very strict on this. Now let us go to the key management personnel, what they say about key management personnel. So for every item, disclosure level is separate, it's different. Not everything is disclosed together. For example, the first one is based on is on parent and subsidiary relationship. Now the second one is key management personnel. What do we need to disclose under this? The total compensation granted to the key management personnel should be disclosed and broken down into following categories. You have to break down like this, not aggregate, but whatever the compensation, this should also be disclosed and broken down into categories like this. They have given you the 4 categories. Why? Why that only the compensation for the key management personnel should be disclosed and not for the other employees? The reason is because director level people charge a very high remuneration. You must have seen that the remuneration is so excess for the executive director that a lot of fraud or anything is happening is on this area. They try to hide it, right? Because it is not something considered as a good thing for the company. It will not maximize the shareholders' wealth. If they take a huge remuneration, then what they should be given, right? That's why their compensation or their remuneration should be classified so that auditors can check what is the actual amount in the market. They will compare with other, see whether it is reasonable, whether it is in the reasonable range or not, or whether is it too high. Because one of the ethical issue, one of the issues which is happening now is excessive remuneration, directors' remuneration. That's why this needs to be broken down. They are breaking down how much is the short-term benefit they are receiving, how much is the pension benefit they are receiving, how much is the termination benefit, and how much is the share-based payment scheme. It needs to be broken down. This, for example, your total compensation or total remuneration is 10 million, 1 million. That 1 million you need to break down how you are getting that 1 million. How much of it is the short-term benefit, how much is the pension benefit, how much is the termination, how much is the share-based payment scheme. Okay, so it needs to be broke down, disaggregated. Third, disclosure of transaction and balances. You need to disclose transactions as well as the balances. Okay, so if there's a transactions between the related parties, and also if there are balance outstanding between the parties, it should be disclosed. What should be disclosed? This, the list is given. First, you need to disclose the nature of related party relationship. What is the nature? Then you need to describe the transactions, description of the transactions. Who is owing whom and all. Amount of the transaction is very important, because if the amount is very high, because it's easy for you, most of the people, to hide their transactions if it's very huge. If they are related party, right, they don't disclose it. That's why the amount also they want. Amount and the detail of any outstanding balances, if they have any amount, and also the detail of any outstanding balances. Allowances for receivable in respect of outstanding balances. What is the allowance for receivable? Next, irrecoverable debt expense in respect of outstanding balances. Not the whole amount might be paid. Sometimes some amount might not be paid, never be paid. So they are irrecoverable debt expense. How much is it? Needs to be disclosed. Okay. So IAS 24 specifies that an entity may only disclose the related party transactions were made on terms. Okay. Only disclose that the related party transactions were made on terms equivalent to those that prevail in arm's length transaction if such terms can be substantiated. Okay. So what is it? They specify that an entity may only disclose that related party transactions were made on terms equivalent to those that prevail in arm's length transactions if such terms can be substantiated. Okay. So in whatever it is, it's very hard that it is in the market length, right? That's what they mean. It needs to be disclosed. Okay. Because your term might be different to the arm's length transaction terms. So it needs to be disclosed. Now let us go to the garment related entities. Different disclosures you get for the garment related entities. That's why this is a separate topic. A reporting entity is exempt from the above disclosure in respect of the transactions and balances that they have with a garment that has a control, joint control, or significant influence over the reporting entity. Okay, so if they have any transaction and balances with the garment, okay, and the government has the control or the joint control or the significant influence over the reporting entity, in that case you don't have to disclose, you are exempt from the disclosure. Okay, is exempt from the disclosure. Okay, if the transactional balances that they have with the government, that also the government should have the control, not any government. If the government has the control or a joint control or a significant influence over the reporting entity, and then you are having any transaction or balance with that government, disclosure, no need to disclose, exempt. But remember, if this exemption is applied, IAS 24 requires that the following disclosures are made instead. If not this, then that. Something needs to be disclosed, but details of the government and the description of its relationship with the reporting entity. What is the government's relationship with the reporting entity? Details of the individually significant transactions. Individually, if the amount is very big, material needs to be given. The details needs to be given. An indication of the extent of the other transaction that are significant in aggregate. Okay. So other transactions which are not so significant, once you aggregate them together, then they become significant. Okay. So then you need to disclose it separately. Details needs to be given for that. Now let us go through an example of related party sales. Okay. Patrol reported revenue of 500 million in the year ended 2001 and 450 million in the year ended 2000. So it increased by 50 million, right? This is an increase of 11%. The average revenue increase in the market in which Patrol operated was 5%. But this is a way too much increase, no? So disclosure, related party disclosure note is provided. What is it? They have given what is the sales to related party. So we know that joint venture is a related party to the reporting entity, even an associate, right? So they have given. So joint ventures are entities over which Patrol has joint control. Associates are entities over which Patrol has a significant influence. This we know. So this relationships may have enabled Patrol to push through extra sales in current year to improve perception of its performance. What did they do? Extra sales, they have put it in the current year so that their performance is boosted up because of this relationships between the with the joint venture and the associate for the Patrol, right? So if the related party sales was striped out, then revenue in 2001 would be 4445 million only, not 450. Sorry, not 500. Because some are related party sales also. So if it was not there, then the revenue would only be this much, not 400, not 500, and the revenue in 2000 would be 435, not 450. So this is a 2.3% increase year on year, which is below the average market increase. So this is a 2.3% increase, whereas the market increase is how much? It's below the market increase. So the information is relevant. So that means this information is relevant because it might deter further investment in Patrol, whether from new or potential investors. So this will be helpful for the new investors. Let's say they might want to invest in Patrol, but now looking at this, they might not want to invest in Patrol. Okay. Now let us go to another example. See, I will tell you, do every possible questions are related party, IAS 24, because this standard is very important, and I can very highly predict that you are definitely going to get this standard in your September setting. So go through all the possible questions for IAS 24. In your new current changes for IAS 24, this will be asked as other reporting issues. So now this is on key management personnel compensation. Okay. So here they have broke down the compensation, short-term, post-employment and share-based. Short-term compromises of salary and benefits earned during the year and bonuses award for the year. Okay. So if you see the remuneration, I will keep it in front of you. Remuneration increased by 1 million from 2 to 3. This is a 50% increase, isn't it? This is a 50% increase. They have calculated this increase. You don't have to go and calculate it again. Okay. When they have given some increases, don't try to go and calculate to see whether this 50% is right or wrong. This will waste your time. So this is a 50% increase. Some of this is related to salary and bonuses. whereas the rest is related to share-based payment. So users of the financial statements, they will need to assess whether the financial performance of it justifies such a large increase in remuneration. They have to see whether their performance is also going up to justify this high remuneration, right? The increase. If not, information presented in the disclosure note may suggest that the raters are exercising poor stewardship over the entity's assets and that corporate governance arrangements are weak. That means, what does it mean? That means if the financial performance is poor, but their remuneration is high, that means they are not being a good steward. They are not being able to manage the company's assets properly, the managers or the directors. Even the corporate governance are weak. That's why they are charging such a huge amount while the company is not performing well. See, if the company is performing well and if you are being given high remuneration, it justifies, right? Because you have helped the company to be to improve financially. So it justifies that you are also charging now a high remuneration. But if it's the other way around, company is not doing well, but you are keep on your remuneration is keep on increasing every year, does not justify. So high management remuneration may mean less cash available to pay dividends. So ordinary shareholders, yes. If remuneration is usually going only for the directors and all, okay, and the package is very high, that means you will not have so much of cash to give to your ordinary shareholders as dividend. So as a response, some investors they might sell their shares in this company, right? So that's it for IAS 24. Now let us summarize. What did we go through? We went through the disclosure of related parties, the need for it, right? The main thing is because whatever the transaction happens between the related party, they are not at the market rates. They may be higher than that or lower than that. For example, sales, they might charge higher than the market price. If it's a purchase, if they have purchased, it will be charged at a lower rate. Therefore, their profit will be way too high compared to the market. It distorts the financial performance and the position. That's why you need to disclose. And what are the disclosure? Parent subsidiary relationship must be disclosed. Also the transactional balances you need to disclose. Also the key management compensation. You need to break down into category. So that's it for IS 24. The next part of this will be I'll be covering all the test your understanding. So see you then and take care.